Hello everybody and welcome back for today's video of DIY investing. Thank you all so much for tuning in for today's video. I'm very honored to have you guys a part of this. For today we're going to be going over and covering market cycles. This was a question that was brought up to me by one of my members of my Discord. They asked me if I'd go over and give you guys my overall analysis and thoughts when it comes to me taking my trades inside of a market cycle time frame and how I go about actually structuring my trade. If you guys find this video helpful at any point, do myself a favor by leaving a like, comment, and subscribing to this channel for more updates. If you guys want more analysis, click the invitation link in the description of this video, and there you're going to get access to my Discord server. Lots of awesome analysis, lots of awesome people in there, so feel free to join that and get access immediately today. Thank you all so much for watching. Let's get right into it today. Now, when I first got into trading, I didn't know what I was doing whatsoever. I was about 18 years old, and really the only resources that I had to teach myself were what videos I could find on YouTube, which none of them pertained to cryptocurrency in 2016. It was all stock and Forex, which really aren't super applicable to trading cryptocurrency today. And so I had to educate myself on pretty much everything I knew, from the help of friends that were close to me that I was trading with, and then actually spending money on courses and things to just educate myself. I was able to really take my trading to the next level, and that first major jump and leap happened when I started to understand the emotional psychology of market cycles. Now, market cycles are most important to me because of the fact Bitcoin and cryptocurrencies behave on these cycles unlike anything else we've seen in traditional markets. Now, what you see with Bitcoin is these parabolic runs, right? Anybody that's been watching my channel, I started my channel right about here in the bear market, but I've been trading since back in here in 2016. Now, what I've learned from trading these cycles is that through the entirety of Bitcoin's price history, this happens time and time again. We have short consolidation periods followed by parabolic runs. We have little sell-offs followed by a new parabolic run, little sell-off, and then the new run, and it just continues to follow these cycles. And so for me, it's much more profitable for me to accumulate at relative low points in the bear market and then just scale out accordingly into the new bull cycle, because as proven by the last bull cycles, these things break to all-time high and they just go super parabolic. And so it's really impossible to know exactly how high it's going to go. You don't know how hyped the cycle is going to get. And so it's much easier for me to accumulate when things are at a relative cheap point in the bear market. Now, there's so many factors that go into play when I say accumulating at a relative cheap point. And you guys might be watching this and asking yourself, like, what does that mean? That's so vague. And that is vague. But with this video, I'm going to go over and actually help to minimize some of that vagueness in what I'm saying right now and show you guys exactly what I look for when it comes to trading market cycle setups. Now, market cycles are the most effective for me because it taught me how to manage my own emotions when it came to trading. Now, I have made videos talking about this on my channel, but I'm going to go in and really dive in and make this one the most valuable that I possibly can, because there are things that I didn't talk about in the last one. Now, what I look out for, and I'm going to probably go back to this chart periodically through this video, is the Wall Street cheat sheet. Now, this has always been really the first chart that I ever started learning about market cycles from. And it's been such a significant chart in my opinion because it's really taught me how to master my own emotions as well as see the emotions inside of the market cycle from other people as well. Having a community on Discord and having people that follow me on YouTube, I actually am able to gauge sentiment just from watching you guys and even seeing on Twitter. And so it's all just parts of the emotional psychology because humans are emotional creatures. The entire markets only move because of the emotions that are created from humans trading them, right? And so with that being said, this is the chart that we watch out for more often than not, specifically when you're trading bigger picture market cycles like I do, because this is the emotions that play. What you have is these parabolic runs, these sharp crashes that take us back down to almost full retraces. In crypto, you do see full retraces and then even some deeper than that. And then you'll follow the slow accumulation. Everything bottoms out. Everybody's scared about even buying into it again. And then you start the next cycle back up. And this is really what I watch out for when it comes to trading these market cycles. And you'll see this pattern play out time and time again. So we're going to drop it to shorter time frame. Let's take a look at the current cycle. that we just had inside of Bitcoin, because this is really going to be that perfect setup that I'm watching out for. Now, what we saw was we saw lows at about 200 bucks, and that when we broke out from that, we went and made our parabolic run, right? And then we eventually topped out at about 20K and started the bear period. Now, notice, guys, we started this rally at about $200, sub $200, and we went from $200 all the way to 20K, so about 100x, right? Now, we bottomed at about 3,200, so we didn't retrace the entirety of that entire parabolic move. We still made a significant increase and stayed trending much higher than that $200 level that we bottomed at. And so with that being said, these market cycles will make parabolic runs. They'll retrace about 80 to 90% of the move, and then they'll start the next cycle up. And so that's generally what I look out for when it comes to trading a market cycle. So one of the first rules that I have, and these are all rules, guys, that I've came up with trading the last breakout, the entirety of the last bull market, and then trading the full bear market in between. And so these are all rules that I've created for myself. This is really just my own private analysis and my own private trading plan. You guys can take with it what you will, but this is my own strategy, and so this is kind of the way that I base my trades upon. So with all that being said, the things that I look out for when trading a market cycle is at least a 75% retrace, and really what I'm looking out for more than anything is about an 80% retrace if you're trading a big picture market cycle. Because if you're trading a big picture market cycle, you're going to have a significant retrace on the downside, because what follows previously was a significant bull run. And so the only way that the markets can continue to go up is if they stabilize, sell off for a little bit, and then build up enough of momentum to start back on the upside again. And so from here, we're going to be able to see that an 80% correction took us to about $3,800, just about 4K, right around that area inside of Bitcoin. And so just by accumulating 80% of that move, you would have accumulated the relative bottom of that market cycle. Now, 75% would have been where I started to place my real first bids in the next cycle, because something to keep note of, guys, is the fact that I didn't trade this last bear market as well as I could have, because I didn't necessarily know what to expect out of this bear market, because when I first got into crypto, I got in after the breakout. I didn't have the opportunity and the luxury to trade this entire last bear cycle. And so really it was a big learning experience for me to even figure out what the hell I was doing. And I really didn't figure out what the hell I was doing until the next cycle started. And so with that being said, one of the mistakes that I can point out now is the fact that what I can tell you now is I would start accumulating at a 75%, an 80%, an 85 to a 90% retrace. Anywhere in that given guideline is where you're going to be able to find the best risk reward ratio setups based off of market cycles from what I have found thus far. Now, with that being said, I want to give you guys kind of some alternative perspective, and that is what not to do, because I did make mistakes in this bear market. I thought that it was likely that we were going to bounce right here. I did have the secondary account that we sold through, but my primary account was that we were going to go bullish. And so what I wish I would have pointed out, or what I wish I would have paid attention to, was the fact that 6K support on Bitcoin really only took us to about a 70% correction, and really even below a 70% correction at 69%. And so my mistake trading the last bear market was that I really didn't take enough time to just wait for a bigger decline. I got too excited once I saw that it looked like we were forming a solid support, and then we ended up selling through that, and I could have accumulated a lot more Bitcoin had I just waited and had a little bit more patience, but I didn't. And so this is what I wanted to point out. A mistake that you guys should not make, and that you can fix and correct by watching this video here, is the fact, wait till at least a 75% correction from all-time highs before you really start to accumulate a market cycle. And now we're going to go back down here, and I'm going to show you guys another market cycle with Bitcoin. And this was really the first market cycle I ever had the opportunity of trading. Now, we're going to go back through here, and I'm going to go and label this same analysis, right? Now, from the high of the move, we're looking for at least a 75% correction before we start accumulating. So 75% correction takes us to about right here, $292, or roughly the bottom of the double bottom formation, or the first higher lows of that double bottom. Now, an 80% correction takes us to $233, which is about the bottom or the average bottom of that move. And then 85 takes us to almost the exact bottom at 173, right? And so with these market cycles, if you would have followed that guideline of accumulating at 75 all the way down every 5%, so 75, 80, 85, 90, 95, and so on and so forth. If you would have followed that guideline, you would have accumulated the relative bottom of this cycle too. And so this is what I watch out for Bitcoin cycles, is the fact that at about an 75 to an 80% correction, you're accumulating the relative bottoms of those cycles. And you can throw it back to even some of these other earlier charts and cycles with Bitcoin. This one's not going to be quite the same. This one's going to be much more volatile. I think that this one corrected about 93 to 95%. Yeah, about 93% correction. But you would have started buying at about 75. Should have been right here. So then 75, 80, 85, 90, 95. So it's just a strategy that I follow personally. Now, you're never going to be able to nail the exact bottom. You're not going to be able to nail the exact top. And so really, with these market cycles, just having a smart accumulation plan is so important when it comes to actually being profitable with the market cycle. Because even if I take some short-term losses, maybe it goes down a little bit further from my entry, I'm averaging into my position to where once the bull market cycle starts, this entire bear market is going to look like nothing on the way up. And so I'm really not worried about it. And so this is my first rule when it comes to trading a market cycle. Wait for about an 80% or wait for a 75% correction. In Bitcoin, you want to wait for at least a 75% correction. In altcoins, you want to wait a little bit later. I would say at least an 80% correction, because altcoins fall a lot harder than Bitcoin does. They're a little bit more volatile. And so with Bitcoin, my strategy is what I look for. Rule number one, 75 to an 80% decline from all-time high. You want to see... Really what I look for is on the log scale. I like to draw my trend lines. And what you're looking out for is the break of major descending resistance, right? Every time we have a break of major descending resistance, we start a new bull cycle. And this is what's happened every single cycle thus far. And it's one that I feel like you can really count on for the next few cycles to follow, or however many we have. This could be the last one. I'm not sure. But what I can say, based off of all three of the last market cycles, this is the same pattern that plays out. Now, if you would have bought the breakout, you would have bought here at about 4K, a little over 4K. That would have been your breakout point to start accumulating. Now, with that being said, this is my second rule when it comes to trading a market cycle. Now, what you want to see is about, like I said, 75-80% decline. That's your pitch or the cue to start accumulating. Now, if you would have started accumulating in there, this still would have been in the bear market, and we wouldn't have had a confirmed trend reversal because we still hadn't broken out of this major descending resistance. And so, really, with the market cycle, you're casting your first bit of risk by accumulating with prices having yet to break out and confirm that this is a confirmed trend reversal flip. But with that being said, you can kind of minimize that risk by saying, well, we did have a massive bear market. We are now 80% corrected from all-time high. I think that it's okay to risk a little bit of money and start accumulating, because you're going to feel the emotions, guys. I'm going to go back up to the emotional market cycle, because you're going to be feeling emotions all throughout your trading. When it comes to watching these, it's a lot easier said than done. And I can be the judge of that from buying at 6K. I thought that this was going to be the bottom, and then we sold through that one more time. Can you imagine the emotions that you feel when all of your investments are dropping 50%, and then you have all of these bearish charts that are calling Bitcoin to sub $2,000 levels? It's really taxing on your emotions, and so you got to pay close attention to your strategy. And that's why I can't stress this enough right now. So many of my mistakes would have been completely mitigated or minimized to the fullest if I would have just stuck to this exact plan that I'm telling you guys right now and just traded that accordingly. I wouldn't have had so many of the same mistakes, and I would have been much more profitable accumulating in this bear market. But you live and learn, and so that's really what I'm here teaching you guys today. If you follow these rules, when it comes to accumulating and trading a market cycle, I can basically promise that you're going to be very profitable as a trader because it's not super hard to follow. And one thing I've learned, as long as you give yourself rules to base your trade upon, as long as you give yourself rules before you really take that trade, so you know exactly what you're doing before you take the trade, while you're taking the trade, and then after you took the trade, you're going to be much more profitable. And so this is my second rule. Watch for the breakout of the descending resistance. Once the breakout occurs, really that's your cue to just buy and leverage in as much Bitcoin as you can because that's the best buying opportunity that you're going to get right after the breakout. Whether it's the breakout and retest, this one just broke out and went to new highs. Breakouts are a good time to be buying for the trend reversal. All right, guys, next up, we're going to be taking a look at my third and final rule today, which takes us to time frames. Now, from a time frame perspective, in the last cycle, we spent about a year in the downtrend. A little over a year in the total downtrend from the high to the low of capitulation, right? And then we went into this sideways accumulation that took us almost another year, about 6 to 8 months on top of that, before starting the new bull cycle on the upside. And so really what you saw here was about a year and a half of accumulation before we broke up and out on the upside. Now, if we come back here to the first cycle, it's going to be much, much less because there wasn't a lot of money inside of Bitcoin, and so I'm not really going to be counting that one for a time frame perspective. But what we saw in this current bear market was prices accumulate for about 470 days before we got our breakout, right? Now, that breakout is about, a little over a year, close to that year and a half mark. And so what I'm going to be watching out for this next bear cycle is going to be a time frame perspective of about a year and a half to 2 years. That's what I want to stick to. I think that anywhere within the time frame of a year and a half to 2 years of a bear market is a very significant time in which you can be accumulating before the next bull cycle. And that's what I found thus far. The bull cycle lasts, so from 2011 to 2013, we saw a bull cycle of about 742 days. So about 2 years time, and then we saw from the last bull cycle we saw about 805 days, so about 2 years time on both of these cycles. Now, like I said, we're not counting this first cycle because it's not going to be as accurate, but with that being said, we're following relatively the same pattern between this cycle and the last cycle in 2016. Now, what that really means is the fact that we accumulate for about a year and a half, a little less than a year and a half, and then we have about 2 years of bullish markets. So about 2 years of bullish markets, right? Now, after the 2 years is finished, we start the next bear cycle, which is, like I said, about a year and a half. And so this is the time frames that I'm watching out for with this next bull cycle to follow, is about close to 800 days of uptrending. And I think that it'll follow relatively close to the same cycle as the ones previously, just because that's the way Bitcoin works. Now, it's hard to say because we have the halvenings that happen. There's a lot of different factors that go into play with this current cycle. I think that we're front running the halvening right now, and we're not seeing the same slow accumulation like we saw thus far. And so maybe this cycle happens a little bit quicker. We're going to have to watch and see really what happens. But thus far, really what I wanted to go into was some more in-depth analysis when it comes to trading these cycles. What I'm watching out for is rule number 1, 75 to 80% decline in price before I start accumulating. Rule number 2, I want to see a breakout of major descending resistance. And then rule number 3, I want to see generally about a year and a half to 2 years of bear market, followed by at least 2 years of a bull market. And that's kind of the way it works. So once we break out of that major descending resistance, that was really our cue of the new 800-day cycle that I would expect to follow, or close to that time frame. And so this is what I wanted to show with you guys. Now, before we wrap up this video, we're going to dive in and take a look at one final altcoin, just to give you guys a little bit of an alternative perspective when it comes to trading market cycles. Now, this market cycle is a little bit different from Bitcoin's, but it's kind of the same as far as the emotional psychology. So with these altcoins, you're seeing the same setups where You have these sharp parabolic runs, they crash, almost fully retrace, and then they start the next cycle up. Now, these retrace a lot further, and so I wanted to briefly touch up on altcoins because of the fact, you know, our 75% retrace would have took us to here, and that really isn't a good time to be accumulating in the picture of this cycle, right? Now, 80% would have taken us to about here, and so even this really isn't the time to be buying. We're currently sitting at about a 93% correction on the dot. And so altcoins are going to retrace a lot more. So what advice I can give you guys as far as trading altcoins is wait for a 90% correction. I'd say the first part in which I'd start buying is an 85%, and then every 5% below that I'd add more. So 85% from all-time high is my first real bids for accumulating, and then I'll add every 5%. Now this is really the same concepts. If I drop this to a log scale, we're going to see kind of the same sort of rules that apply. We have this major descending resistance. We ended up breaking out of that, and so we're now in the clear, in my opinion. I don't see this going to new lows because, you know, we've broken major descending resistance. This looks to me like the Bitcoin 2015 2016 double bottom formation before we went back up in the next cycle. And so this is what I'm watching out for, guys. Once again, just my simple rules that I follow. With altcoins, my time frame rule is going to more or less just follow Bitcoin. Bitcoin is the driver of the altcoin value, and so when I'm taking profits when it comes to Bitcoin, I'm going to be scaling out of altcoins at the same time because, you know, when Bitcoin tops, the altcoins are going to do the same thing. And so really the time frames and cycles as far as that goes behave as far as what Bitcoin is giving us. Now, that's really all I had to show for you this video. This is really just my 3 basic rules when it comes to trading some of these. Now, how to know not to buy too early, all I can tell you guys is you don't. It's as simple as that. Like I said, I just stick to a guideline rule. I say with altcoins, 85% correction down from all-time highs at least before I start accumulating. With Bitcoin, 75%. And that's the strategy that I've built for myself. That's how I'm going to be trading the next cycle whenever we top out from that. And that's how I'm going to continue to do so with cryptocurrency from here. But this is the 3 rules that I've learned that are most important for me from trading in the last bull cycle, the bear market that we just experienced, and now entering this new bull run that we're going to have. This is how I've built my strategy when it comes to trading these market cycles. And so this is what I wanted to share with you guys. Quickly go over this video, give you guys a more in-depth approach with how it go about basing my trades with market cycles, and just kind of clear up some confusion that some of you guys might have had from some of my previous videos talking about market cycles. So thank you all so much for the support of this video. If you guys found this video helpful, do myself a favor by leaving a like, comment, and subscribing to this channel. With all that being said, I will catch you in the next one. As always, peace out.